What's going on, ladies and gentlemen? Welcome to Surviving Canada. Welcome to our first official video here on the channel, getting into the topics that are going to save you money and show you how to gain financial stability in today's Canadian economy. One of the things I constantly hear when talking to my peers or reading in comments is people finding the inability to pay their bills or get by. And a lot of the reasons that people struggle to move forward are interest payments that they're paying on accumulated debt. Now, I call that Band-Aids anytime you get a loan or any kind of time you get some kind of line of credit from a bank, because while it seems like it's fixing your problem, it definitely is not. Now, one thing I've always tried to do in my household, again, I did not have credit cards until I was the age of 35, and the only debt that I actually have accumulated in my current home is the mortgage payment that we pay every month. Everything else has been done with cash. What you see behind me, everything I've done is cash. And people say, well, it's not that simple, Derek. I can't make ends meet with all the debt that I've got. I'm going to show you how to whittle that down, where your money needs to go, and how you can get yourself above water faster than you think. And again, I want to start with an article today coming to us from Forbes that handles cash versus credit. Which should I use? Now, again, everything I've done in my home was done on the premise of cash first. I don't want to pay too much for something, meaning I had a family member who financed a computer, for example, a desktop PC. And they said, well, it's only $40 a month over 2 years or whatever they were paying at the time. Now, they had bought a $2,000 personal computer. And when you calculated the interest that was put into it, again, at these very high exponential rates, by the time they were done paying for that computer, they were paying almost double what they did. So a $2,000 computer was now worthless at $4,000. And again, it's worth whatever it's worth to you when you're purchasing something. I'm not saying people don't use credit, but the reasons credit is a bad thing are the very detailed explanations that are given in this article. And then I'm going to talk about my own personal experiences and how we fix this problem. So it starts off here, which is better, cash or credit? Depending on who you ask, you will likely get a variety of responses. There are significant pros and cons to using both cash and credit. In some cases, the merchant will indicate which payment they prefer, but ultimately, the method you choose comes back down to which option works best for you. Here's what to consider. First, and this is again one of the things I totally back up, evaluate your spending behaviors. It's important to consider your spending habits before choosing a payment method. Paying attention to how and when you spend money can help inform which option may be best for you. Do you know when you are most likely to overspend? Do you find it easier to make a purchase on a credit or lose track of when you have cash that was spent? If you're carrying a large credit balance or struggling to stay on top of payments, sticking to cash whenever possible may help you pay down debt. Dave Ramsey popularized the envelope method, encouraging people to use cash whenever possible. Many people use credit cards regularly and rarely carry a balance. If you can stay on top of your payments and pay your card in full, a credit card is probably a great option for you. Now, what I will say is that me personally, with my credit card, I have what's called a no rewards credit card, which means that I carry a lower interest rate by paying off the balance and not having anything like cashback or money going towards flight packages or different points packages that credit card companies will offer. By doing that, I have taken what's usually an 18 or 19% interest rate and whittled it down to about 8% interest for those that want to carry a balance. You should always talk to your banks about which credit cards supply you with the lowest interest rates in order to make sure that when you're paying down your debts, you're paying little money to the banks and more back into your balance owing. The important thing to remember here also, and one thing that is mentioned here about Dave Ramsey and his ability to use money, is that your credit cards should never have an extremely high limit. I understand that some people, again, have taken out credit cards on the premise that, well, I'm going to use it for emergencies, or I'm going to use it, if something happens to my vehicle and I need a repair, if I need to pay a medical bill all of a sudden, or any kind of unexpected expenses, booking hotels, flights, credit cards are very handy. But out of the 9 years that I've had a credit card, I can tell you right now, I've made sure every single month I don't spend what I don't have, meaning that I don't go over more than what I know I can pay back the next time I'm paid, whether it's from my job or from my own expense accounts doing my own company business. It's very, very crucial when you carry a $10,000 limit, a $15,000 limit, even a $20,000 limit on a credit card, the banks will love you when you spend those amounts of money. If you say, I'm going to book a vacation, or it was a good deal on something, or I had to buy furniture and I didn't want to finance through a company, I needed something right now. Those are situations, again, where I call Band-Aids. It's very nice to get those things. It's very nice to have those things, or to feel that, phew, I've given myself the coverage I need to get out of the problem or this bind that I'm in. But what you don't realize is that you're actually paying 3 to 4 times more than what it was worth when you're done paying it off. Depending on your location and the total amount that you purchase, some merchants may only accept one form of payment. Some merchants may refuse a card payment if the purchase amount is too low. And while debit cards are treated like cash in many circumstances, if a merchant refuses to run the card for a small transaction, you will need actual bills to complete the payment. Now, this is again based off of a US article with Forbes. But what I want to stress here is different methods of credit. You can have your main credit cards for things like emergencies. It's always advisable and great for credit if you're constantly paying off your balance to zero every month. The banks will dislike you, but your credit rating will love you. If you're always at a zero balance, your credit rating will shoot up. The banks will always offer you more money. Turn it down. Don't take it. Never spend what you don't have. When it comes to debit cards, I know certain banks these days offer a Visa debit card or a MasterCard debit card, meaning that you can use it like a credit card. You can use it to book your flights. You can use it to pay for anything that requires a credit card. You can use it when renting a vehicle, the same as you would a credit card, but it comes out of your checking account versus a credit card. And when it comes out of your checking account, ladies and gentlemen, there's no interest on that. You either have the money or you don't. During the pandemic, the CDC recommended merchants promote TAP to pay limits of handling cash. In response, many merchants requested card-only payments to minimize exposing their employees to germs. Those accustomed to card purchases raised concerns about this practice, but the Bank of Canada says that retailers are not obligated to accept cash and coins because both parties must agree on the payment method. Now, again, cash isn't always going to be the option, but when I say cash in this video, I'm talking about your debit card. I'm talking about your checking money rather than lines of credit, rather than credit cards in order to pay your bills. Fraud protection is a definite must. I've seen many people who scan their cards, and again, if you're watching this video, if you know anything about credit, you're not a moron. You understand that fraud protection can and does happen more often than not these days. Always, 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 no matter what credit card you take from your banks, make sure and ensure that those cards have adequate fraud protection, purchase protection, and insurance. This is something that I didn't realize was even offered when I first took my credit card, but it has been very handy. And that's purchase protection is a free service that covers damage or theft of items purchased on eligible credit cards. Your card may also offer extended warranties, price protection if the cost of an item drops, or return protection allowing extra time to return merchandise. Again, different banks will have different benefits. I know my bank offers purchase protection on multiple retailers, but anti-fraud detection does come with that as well, and that was the next thing I was going to get into. A grace period is the one thing I want to talk about because a lot of people misunderstand this. With a grace period, you can use credit cards without ever paying interest. The period between the purchase and the due date is called a grace period. By paying the card balance in full each month, you avoid interest charges and can defer your payment up to 30 days without paying interest, meaning that anytime you make a purchase, again, what I typically do in my household, what I do to manage my budget is I look at my credit card statement and say, for example, I need new tires for my car and they're going to cost, I'll just say $1,500. I'm going to get my tires done at $1,500. What money do I have coming in this month? I'll take a look at my bills. If I work a 9 to 5, then I already know what my paychecks are. I know what my budget is. If I can't afford to do those massive $1,500 payments, or say I'm going to do $300 a month for the next few months, I might pay, $30 in interest over those 3 months, but I'm going to pay it off as soon as possible. You have to stick to the disciplinary agreements that you give yourself when you take those cards out. More often than not, people again will use the credit card as a band-aid and say, well, I'll buy my tires now. I'll pay the money back over 3 or 4 months. And before you know it, they come into something else where someone says, let's go to a nice restaurant. Let's go out to dinner. Let's go on a trip. This new TV came out and I need to replace my television. A water pipe burst in my house. Whatever have you. People will come up with excuses to say, well, I had to put this on my credit card too because problems arise. Things come up. I wasn't thinking clearly about things. And before you know it, you're swimming in debt. And the majority of your income every month isn't going to principal. It's going to interest. It's the one thing. I know people are going to feel like I'm talking to them like they're stupid here, but it's the one thing that people rule out of their lives and don't take into accountability is just how much of your income you're spending on interest. Rewards, cashbacks, and bonuses. Again, I'm not going to get into that too much because that's personal choice, but the purpose of those is all based on your lifestyle. I recommend, again, if you want to pay down your balance faster, go with a low interest card carrying balance so that you're not getting any benefits of reward miles or cash back. Again, you have to spend significantly in order to get any form of reasonable cash back on credit cards. I think it's better to take a lower interest rate at a prime plus rate in order to pay down your balance faster. Paying down your balance should be the top priority and the biggest reward that you get from your credit cards. The benefits of cash here is versatility, of course, cost savings, again, when we talk about interest. Debt reduction. If you have amassed a large credit card balance, switching to cash may help you reduce your debt. By making the minimum payments and avoiding additional card purchases, you can reduce your card balance more quickly. That was the one thing I wanted to get in touch with on this video because that is a false statement. I know Dave Ramsey is somebody that Forbes looks at to get financial advice, but one thing I'm going to tell you right now is that the way you get out of debt faster is pay down your principal as quickly as possible. I've spoken to banks multiple times, and there's been times where, in fact, earlier this year, I had a massive repair bill within my home that had to be tackled. And my wife and I, while we have finances coming in, I have a business banking account and I have my personal banking account. If I take money out of my business account, I get taxed on that money. It's income, especially if I use it as dividends. There are ways around it when it comes, and I'll get into different things about running a corporation in other videos. But the problem is we looked at the cost of interest, we looked at what we'd be paying in debt, and we talked about things like RSPs that were being transferred over from other banks, from jobs where my wife was having matching from her employers and she's moved now to other positions. We have savings in multiple areas. Now, what we did was we sat down and talked to our bank and asked them, what is the best method right now to take out some money without accumulating a lot of interest? How do we pay it back quickly? And how do we get sound? Our repair bill was just over $6,000. And we were able to get that done and paid back immediately on a household that brings in an average of $5,000 a month. Debt is very manageable if you focus on covering the principal rather than paying interest. Anywhere you're spending your money right now, and I know, ladies and gentlemen, it's hard in today's economy. I know people are looking at things, but anywhere where you can cut costs and say, look, I smoke. It's expensive to smoke, so instead of smoking X amount of cigarettes in a day, I'm going to cut that in half. I'm going to start restraining myself because as you accumulate those little purchases and saying, I'm not buying as often as I used to, I'm not going out for coffee as much as I used to. When you go to the average coffee place these days and spend $3.50 on a coffee, a lot of people don't realize that $3.50 a day over 30 days, or let's say 20 if you're going on a five-day work week. If you go for a coffee every single day, that's $60 a month that you're spending roughly just on coffee. Now, if you go twice a day and get a coffee, that's $120 a month you're spending out. Instead of doing the coffee, bring a coffee from home, get one of those Yeti mugs or whatever you have to do in order to take that initial hit of money to say, I'm going to buy this up front. Yes, there's an expense for that too, but over the month, I'm reducing what's going out. I can focus that money back on my debt, pay out my debts, and secure my financial future by being debt-free. And once you're debt-free, make sure that anytime you spend on your credit cards, anytime you're putting something on there, unless it's an absolute emergency, you are not spending over what you have. You're not spending over what you can pay back within a month of your disposable income. And if you're doing that, you're going to find that financial freedom opens up the doors for you. You're going to find that purchases become much simpler, much easier to handle. My wife and I have a line of credit on our home, and we've taken out, and again, I don't like to make my personal business everyone's public business, but we took a personal line of credit when we bought our home at $5,000. The only time we have touched that line of credit is if it's going into the home and if it's something that's going to help raise the home's value. Otherwise, I don't want to do anything on a home equity line of credit for personal gain, for personal ventures or interests or activities. It's for the house. That's what it's there for. That's what we use it for. I would encourage each and every one of you, as you watch this very lengthy video, and we're going to wrap it up because there's more topics to discuss on this. But as you look at your debt, this is the first step to amassing how you can survive in today's economic climate. Look at your overall debt. Talk to a bank about maybe consolidating that debt. Get rid of your credit cards. Cut them up. If you have multiple cards, consolidate into one place and get rid of the rest of them. Stop taking credit. The advice I got from my old man when I was a teenager was stop spending money, or don't spend money you don't have. That's all credit cards are, ladies and gentlemen. That's all lines of credit are. The banks love you when you come in and ask for that. You could ask them for $50,000, and if they can give it to you, they will, because they stand to make a lot of money. But let me know what you guys think down below. Let me know if you are in a position to start looking at your financial expenses and cutting some of that debt, paying off your dividends. Let me know, or not your dividends, but your principals. Let me know if you've already done that or if you're finding it easier once you do. Also, leave me suggestions down below as to any help or any conversations you want to have on this channel in terms of subjects on how to save money. Again, I have a lot lined up for you guys. This channel will upload as frequently as possible anyways with these subjects, and I look forward to chatting with you guys about each and every one of those as we learn together how to continue surviving this country. Again, leave me your comments down below. Leave a thumbs up on the way out. If you haven't subscribed yet, make sure to click that button and join us here on this channel, as we are all in the same boat. We're all trying to dig ourselves out of a hole, ladies and gentlemen, but we're going to do it together, and we're all going to be the better for it. I hope you guys enjoyed this video and have a great rest of your day. I'll catch you on the next one.